What's up, my people? Welcome back to Financing Crypto, a fresh news source for the latest news, trends, and updates in the space so you are always in the know. I'm your host, Rose J. So guys, as I said in my last video, I want to provide a crypto market update as far as the sentiment being felt in the space today. It's certainly been quite the roller coaster lately. It's up, it's down. Why is it down? And now it's back up again, at least for the most part, in terms of the major players in the game. But other than that, it seems really confusing as far as how everything has been reacting. But if we take a look at the numbers, Google trend searches for both Bitcoin and cryptocurrencies in general are down near year-to-year lows from the ecstatic exuberance we were seeing from October to December to where it is right now. So I wanted to go ahead and I wanted to go ahead and try to be a voice of reasoning for you guys and try to give you something to chew on. If you've been in crypto, you know that the volatility that we've been experiencing, it's quite normal. I mean, this is what cryptocurrencies, for the most part, this is what it's been about. I know lately it's kind of been tough. Like it's been pretty tough, with the ebbs and flows of the recent up, down, up, down. But like I said, these cycles are normal. So it's extremely important for all of us involved in the community to just stay really level-headed. Always know what you're invested in before you invest any capital in anything. And that just isn't for crypto markets. That's generally across the board. But in general, again, do your research and due diligence so that the varying prices don't bother you. Because if you've done all the hard work and the fundamentals are the same, you really truly have nothing to worry about. Remember, this market is new, and this is normal in any new market. I want you guys to remember this. There are two types of markets: efficient markets and inefficient markets. So let's take a look at the two. Efficient markets versus inefficient markets. How exactly do we distinguish them? So I'll go into that right now. Efficient markets are old, but they're stable. And they usually provide less opportunity because obviously they're old, they're stable, so there isn't much movement there. Why is that? Well, these markets are usually saturated with knowledgeable investors, people who know mostly about what they're investing in. They know about the asset classes, in particular the industries or the sectors that they're looking into. Also, there is much more liquidity, meaning it takes large volumes of capital to be either injected or released on the upside or the downside to have it make any movement in general. Examples of this could be something like, let's say, stocks, bonds, and real estate. These are all well-established markets that have been around for generations. Now, on the flip side, when we go to inefficient markets, these are new, unstable, and provide much more of an opportunity due to the volatility. Usually, they'll have much less abundance of liquidity. So be level-headed about what's going on. You usually need more time and you need more research to gather information to derive where the value usually lies in these markets. Because they're unknown and because they're more new, it really takes much more research, it takes much more information, and it really takes much more time to really find where you should really be placing your capital. And that's in a nutshell what cryptocurrencies has been over the last couple of years. So let's compare the market cap of stocks, bonds, and real estate versus cryptos. Now, stocks are about at $30 trillion. Bonds, very similar, $31 trillion, and real estate is at $30 trillion as well. These are all established markets. They have been around, again, for generations. Now, when we take a look at the total market cap of crypto, at least when, at the time of this recording, we're at 325 billion. I mean, that's not even 1/30th of either of the three asset classes that we just went over now. Cryptocurrencies have only been around for 10 years, since 2008. So, I mean, they're fairly young. I mean, this is an infant market, to be quite frank. Now, I say all of that to say this. The fundamentals of blockchain and many protocols have not changed. So you should not worry about the prices too often. If you know you've done the hard work and taken positions in protocols that have proven their value with what they bring to the table, then you really shouldn't be worrying about, the gyrations that's going on the day-to-day markets. So please, be resourceful, be responsible, and don't let the news of the day drive you guys astray. Now, on Pinterest, I found this pretty good quote that I want to share with you all, just as a word of encouragement. And this is from Gordon B. Huckley. It says, "That which comes easily departs easily. That which comes of a struggle remains." And I want to leave you guys with that, because think about what we've gone through over the last 6 months. If you were able to hodl through this, think about the potential possibilities going down the line. And guys, this is just a short video. I just wanted to share this with you all. Stay humble, stay focused, stay positive, and I'll catch you guys in the next one, okay? Please like and subscribe, and have a good one.